Goodbye June, hello July, and most importantly, hello brand new all-time highs. Now I know many of you watching this have been playing the overall market or your favorite equities in the bottom left, top right type of bullish direction, and a massive congrats to you. I hope you are enjoying all of those tendies, but most importantly, I think that the good times are going to keep rolling for at least the next 3 weeks, and that's what I want to dive into in this video. So yes, I get it. We are at new record highs, but my Mystic Matt market prediction is that those good times are going to keep rolling all the way at minimum up to the July OPEX. So we have some exciting things to get into in this video. But before we do, if you enjoy these type of market breakdowns, don't forget to like, subscribe, share the video with a friend. With that being said, throw on your lucky shirt and let's get to it. So to have a better idea of what's going on and really an idea of where we might be going, let's do a very quick recap. When the market closed on Friday, June the 27th, here was the official headline. S&P 500 closes at a record Friday, overcoming even more trade angst. Now, obviously, there's a lot that can be said here, but here's the TLDR. The market is continually pumping. Well, inflation is trending down. There's a bit of dovish optimism with respect to the Fed and monetary policy and really the Fed fund rate, but most importantly, the tensions and the angst related to the whole situation in the Middle East seems to be simmering down. And obviously, when you remove uncertainties from the market, it really likes it. And in fact, the market likes enough that yes, we did hit a new all-time high to close out this session on Friday in the S&P 500. We also hit it in the NASDAQ 100. So lots of optimism, and for good reason. But it wasn't just the major indices here. SPY on Friday, we're really drilling in here, gaining 0.5%, the NASDAQ gaining 0.34, the Russell struggling a little bit, small cap not doing the best, and then here as I'm filming this in real time, Bitcoin trading about 108,000, once again, not far from the all-time high. So that's specifically how things played out on Friday. Obviously, with respect to the larger indices, when we drill into the individual companies, same thing, a lot of bullish, green, utopia type of color. I mean, look at this shade of green. I think they're going to be running out of new ones. Amazon crushing it, Google, Nvidia, obviously just to name a few. I just wanted to quickly cover all of that to give you a snapshot of where we are to close out the month, kick off a new month, and really get going with not just the summertime, but a whole new quarter. I have to tell you folks, this is the most exciting time, in my opinion, to be a trader. I love the summer trading session. I know there's that saying of sell in May and go away, but in reality, the statistics, the nerdy math that actually runs the market suggests this is a phenomenal time to be a bull. Let me explain. There's a good chance either on this channel or someone else's channel or maybe just generically on the interwebs, you've seen this chart. This is the seasonality for the past 20 to 30 years of the S&P 500. And as you can see, from late June to pretty much the end of the July, historically, the bulls do dominate. And that's a pretty exciting chart to see, but give me 1 second to really dive into the numbers so you can understand how statistically impressive this time of the year really is to be in the bull camp. According to Goldman, from July 1st to July 17th, it is the best 2-week seasonal period of the year since 1928. So yeah, before I was referencing the past 20 to 30 years, even if you look at the past 100 years, this time of the year still absolutely dominates. Here's a crazy stat for you. With respect to the S&P 500 in the past 10 years, July has only had a red month one time, as in the 9 of them were bullish. And with respect to the NASDAQ 100, out of the last 10, all 10 were bullish. So those are some pretty impressive odds, whether you're talking about the past 10 years, the past 100 years, or anything in between. The TLDR is this: the bulls in the summer dominate. And just to put a cherry on top, July is the best month of the year in a post-election year and the past 20 years. It is the second best the past decade. Once again, no matter how you look at the data, from the top, from the bottom, sideways, inside out, it does not matter how you chop the data up. All the data we have suggests right now, for the summer period, the bulls are in control. Now that we're on the same page, the next logical follow-up question is, great, how can we use this information and apply to trades right now, this year? Well, the first thing you need to know is nothing is guaranteed. Just because the bulls have been dominant in this time period for pretty much ever, that doesn't mean that this year it has to play out that way. Obviously, there's nothing written in stone because there's a lot of things in every given year that could have an impact on it. So here's how I'm going to be approaching it. If you watch the live stream, once again, shameless plug, Monday to Friday, 9 to 11, hope to see you there. It's completely free. But anyway, if you've been watching the live stream, you know that right now I have on a lot of bullish positions and they are up very nicely. Here's my game plan. As long as this trend is intact, as long as on the medium and longer time frame, I'm seeing higher highs and higher lows, the definition of a bullish trend, I'm going to stay in and ride that trend as much as I possibly can. It's not going to be one of these things where, oh, if we hit a certain return, I'm just going to take my money and go, because I have no idea how strong this trend is going to be. If it's going to be amazingly strong, I want to stay in as long as I possibly can. But all of a sudden, if we start to see lower highs and lower lows, by definition, a switch from bullish to a bearish trend, well, I'll take my current gains and just wait for the next setup. So obviously, yes, I think these odds are very impressive. The stats of the seasonality are very impressive, but obviously you have to take on every new trade with respect that it's exactly that, a new trade. You have no clue how it's going to play out. So obviously, respect your risk, look for your reward, and ideally ride the trend as long as you possibly can. This particular summer, or more specifically this particular upcoming week, has a lot of things that could send the market either higher or actually turn it around. So what you need to know is on Monday, June the 30th, Chicago PMI comes out at 9:45. This will also be the expiration of that massive JP Morgan play, so they're going to be forced to roll it a whole nother quarter. On Tuesday, to kick off July officially, we're going to be getting the inflation report from the Eurozone, and obviously Fed Chair Powell. This is a speech that he's giving right at market open. You're going to want to pay attention to that. And then we have the ISM numbers and the JOLTS numbers. On Wednesday, more employment numbers. Thursday, it's going to be a half day in observation of Friday's July 4th. But even on that day, you can see we're going to be getting a lot of economic data drops. And then on Friday, just if you are playing the weekly options, I do want you to know that Friday, July 4th, the market will be closed in observation of Independence Day. So those are all the scheduled events, but don't forget, we're in the middle of a trade war, and we might be getting an update on that at any random moment in time. Most recently, according to Hassett, who is the White House advisor, Hassett says trade deals coming after mega bill passes. The director of Trump's National Economic Council predicted a series of deal announcements after July 4th. So going into July 4th, there might be kind of the rumor mill really getting spun up. And then right after that, the second week of July, hopefully we're getting some positive news there. In fact, we're kind of already seeing the rumor mill get spun up. G7 countries agree to side-by-side tax deal for U.S. companies. The U.S. and fellow G7 nations signed an agreement to create a side-by-side system exempting U.S. companies from some elements of an existing global agreement to avert a global tax war. As part of the deal, U.S. officials agreed to remove the revenge tax provision from President Donald Trump's tax cut bill, which would have increased taxes on U.S. income and non-U.S. based businesses and individuals. So very evidently, that's something we should all be paying attention to, but unfortunately, it doesn't stop there. There's more things you have to consider. Trump tax bill advances in Senate as GOP scrounges for votes. Folks, this narrowly got by. Trump's big, beautiful bill clears key Senate hurdle after high drama. Republicans got closer to advancing President Donald Trump's massive spending package following a procedural vote. The Senate is poised to now debate the mega bill for hours, as Democrats have already signaled that they will force the 940-page bill to be read out loud. That is brutal. Questions still remain about whether the package will ultimately pass the House ahead of its self-imposed July 4th deadline. So clearly, this is all going to be the political drama of the upcoming week. Please pay attention. Now, depending on which side of the aisle you support, you're either going to like this or you're going to dislike it, but I can tell you one person is not happy whatsoever. Musk fumes as Trump tax bill cuts electric vehicle credits. The latest Senate draft bill will destroy millions of jobs in America and cause immense strategic harm to our country. Utterly insane and destructive, it gives hundreds of industries of the past while severely damaging industries of the future. The world's richest man is not happy. Now, I don't know if this is definitively why people are choosing to be a bit more bearish on Tesla in the short term. Overall, the S&P 500 and the NASDAQ new all-time highs. And if you look at Tesla, it's actually struggling. Now, is it because he's once again fighting with the president? Is it because the robo-taxi rollout in Austin, Texas didn't go so well? Is it because sales in Europe are kind of declining? Yeah, it's probably all coming together. But the end result is, even though we're hitting a new all-time high in the market and a lot of our major tech plays are also at new all-time highs, you're actually seeing Tesla do nothing but consolidating. Lower highs, higher lows. It is holding the EMA cloud. I'm looking for a bounce off of that. I do want the bulls to win, but right now we're just seeing a very different story. Netflix, I've been calling this one out to you guys, brand new all-time high, ripping to the high heavens. Nvidia, the world's most valuable company, in real time, higher highs, higher lows, and just clocking in a fresh high on Friday. Similar company to Broadcom, another semiconductor play, Avago, AVGO, once again, another new all-time high. Meta, not at new all-time highs, but very, very close. You have Mark Zuckerberg really leaning into the world of AI, and the stock is loving it. And even Palantir, granted on Friday, it was hit pretty hard because of some rebalancing, but on Thursday, guess what? A new all-time high. So obviously, the ones that are pumping, I have a position on all of them. I'm hoping it keeps going. As I said at the start of this video, I will be riding the trend as long as it is intact, but the one that I'm really waiting to see which way it breaks is old Tesla. And with that being said, I would love to get your thoughts on any of those, but really specifically Tesla, in a comment below. Are you buying? Are you selling? Or are you just waiting to see which way it breaks? Like I said, let me know in a comment below. But that's what I have for you today. I hope you're crushing it. I hope you're ready for the summer. And most importantly, I hope you are collecting all of those tendies. I appreciate the good vibes. I'll catch you in the next one.